Hello and welcome back to our Business Tips. Michael Lapide here from KED to talk to you about cryptocurrency and the taxation of cryptocurrency. Most of us by now know what cryptocurrency is and know there's various cryptocurrencies out there. Bitcoin, Ethereum, Shiba Inu. I could list a whole, I'm not going to go on, but you know what I'm talking about. You can find a bunch of crypto. You can find all kinds of information. The information that's hard to find is how is it taxed? If I buy crypto in my business, is it different than buying it personally? Well, here's the bottom line is you can buy it corporately in your business. You can buy it in a trust. You can buy it personal. It does not matter where you buy it from. The rules are the same. Now, there might be different tax rates, but the taxation rules around crypto, whether business or personal, does not matter. Now, cryptocurrency itself is considered one of two things. It's considered a commodity for investing, or it's considered a medium of exchange for payment, depending what you're using it for. So if you're investing it, you're buying and selling, it's going to be very much like a stock or a commodity. When you buy it and sell it, you have a capital gain. You have what you paid for your adjusted cost base, you have what you sell it for minus any expenses, that's your capital gain. You pay tax on half of that gain. That's the way it works in Canada. Now, if we use it for a medium of exchange, let's say in our business we use it for a form of payment, then we have to peg it to the Canadian dollar. When we take it in, what was it equal to Canadian when we took it in as a payment? Because that's our cost base on it. Now, if it goes up in value before we cash it out, there's a capital gain on this side, but we may also use it for a form of payment over here as well, and that's okay. It's got to be pegged to the dollar, the Canadian dollar, when we use it for a form of payment, okay? So what does this mean for you? Well, the idea is that you need to track your cryptocurrencies. Whether it's in your business or whether it's personal, it doesn't really matter. You need to track when it came in, what it came in at, what the value was, and when it went out, what it went out as. Whether you bought and sold it or whether you took it as a payment and put it out. Now, if it hasn't fluctuated much and you took it in and went back out, it's probably not a big deal. But if it sat there for a while, there might be a capital gain in the middle of that currency. And when you're using it as a currency in Canada, you have to peg it to the Canadian dollar in equivalent on your books, right, in your bookkeeping. Now, at the end of the day, the market value is what counts. So what is the market value that you're pegging it to? You need to look it up, and you need to look it up on the exchange. It's very available on the internet. It's not a problem, right? And no matter what you do, it goes back to what we say in almost every video, plan in advance. So for example, if you know you're going to buy crypto, plan out what you're going to buy, how much you're going to buy, and if you're going to sell it, plan out the sale and plan out the taxes. What does the taxes look like in advance? Now, there is some more complexes, but that's the simplicity of how crypto is taxed. If you got any questions, we'd love to hear from you. Thanks for being a part of our Business Tips, and we'll see you in the next video.